Sports media madness is coming our way in 2024 with the rights to several marquee properties up for grabs, including the NBA. Julia Boorstin joins us now with the very latest on this jump ball. Who's in the competition, Julia?
Well, here's the thing, Dom. Sports is the most valuable content on TV, which means that interest in NFL rights could drive NBA as well as upcoming NBA rights, which are very much in demand right now. With Amazon's second year with Thursday Night Football and Google's Sunday Ticket deal, the tech giants have showed that they're willing to pay up for football, while Paramount Global's NFL rights on CBS are one reason that media giant is drawing acquisition interest, particularly from Warner Brothers Discovery, which is a rare media giant without NFL rights. So now the focus turns to the NBA's next deal, which starts with the 2025-2026 season. The league is in an exclusive negotiating window until April with Disney and Warner Brothers Discovery. Their ESPN, ABC, and TNT currently have the rights to NBA games. Then NBC Universal, CNBC's parent company, along with Google's YouTube, Amazon's Prime Video, and Apple are expected to take a look at those NBA rights and pursue them, while the league is expected to want to limit its rights owners to 3 packages. Now, the NBA is reportedly looking to get paid as much as $75 billion for its next multi-year deal. That would be 3 times the value of its 2014 deal. We could definitely expect streaming to play a bigger role this time around, as it has with the NFL. Dom?
All right, Julia Boorstin with the latest state of play on sports. Thank you very much. Bonawyn, let's talk about this media landscape. Is this one that you want to buy into?
I think for the media players, they have to buy into this. I mean, if you take Fubo, for example, they were essentially able to create a business model solely around streaming. And I think this is one of the differentiating factors when you look at a Hulu or you look at an Amazon. As she spoke, some of the large tech players, their propensity and willingness to spend. So I would expect Warner Brothers to be involved in some capacity. And if not, I would not be surprised if Apple was a sneaky contender here.
All right. There's the trade on the media side of things. Tim, do you feel as though Warner Brothers Discovery, Paramount, some of these things have been so beaten up? Is this the place to be?
I tell you what, I like what's going on with some of these beaten up, some of the parts asset plays who aren't necessarily in the exciting part of, and they have certainly needed to show that their streaming business can generate, real free cash flow. But, I think the paying for content, especially in the sports world right now, is going higher. And it's going higher because people like Amazon and Disney and Google can bid almost whatever they want to support their franchises. So I like the M&A backdrop in the sector. I do think there's a lot of assets up for grabs, and I do like Peacock also from a download perspective and the strength for the parent company here. I think there's actually a very good story around the sports there, and that's part of what made November so strong.
Still a driving force behind it, Carter.
As you say, it's a tough space. I mean, if you were to look at the S&P 500 media sub-industry group, picking up a lot of these names, it is at its relative low of 09 to the market. I mean, so at some point, can a stock turn? Everyone's waiting for Pfizer. Guess what? They're waiting for Intel, and finally it did. But it's usually better to wait a little bit.